All right, it is September 1st. This is today's mathematics, and welcome to Price Discovery. Let's dive in. So, as you guys know, today is September 1st, which means it's Labor Day. Markets are closed, which means it's a shorter trading week. Super important to understand what's going on in the market so that you can understand how to position yourself. Now, when we do have these days off in the markets, now, of course, right, with all the crypto stuff going on, I do want to mention that it's only the equity markets, right? It's not necessarily equity and obviously the bond markets, I guess. But, you can still buy and trade crypto on bank holidays because crypto is 24/7. But yeah, so when you do get a chance to get some free time like that, or you get an extra day where you don't have to trade or there's not an opportunity to trade, it's always an opportunity to learn, right? So feel free to look back at some of the analysis that we've done previously in the past. Take some time to expose yourself to some more information that you haven't exposed yourself to before, right? Maybe learn a little bit more about maybe your favorite companies. Maybe learn more about different indicators. Maybe learn about how to read the Greeks. Whatever it is that you are lacking in, a day that you don't have to trade or you're not able to trade is always a day to grow, right? So that goes for the weekends as well. And that's why we do these price discoveries around the weekend, because we want to be here to help inform, but also to help you feel like, hey, like just because the tickers aren't moving doesn't mean that you shouldn't be. All right. So as you can see here, we've got the Bitcoin chart up. This is on the weekly. Now, anyone who follows Bitcoin knows that last year was closer to 73, and you guys can see kind of how we've got this everlasting uptrend going on. Super important here, right? We had the all-time high at 124, and technically we've been on the downtrend for the last 3 weeks, except for I guess last week was or I guess this is this week. This week is giving us a little bit of a pushback so far, but of course that candle isn't closed. As you can see, I've got my Fibonacci retracement tool already played out from the low of 76 in April. And we've been on an uptrend ever since. So, of course, things can't go up forever. And when you think about these, when you look at the market, right, when you look at these charts, understand that these aren't just numbers on a screen, right? These are buyers and sellers. And so trading is a lot of psychology. So understand every time that a price or a ticker symbol is going to an all-time high, there are people taking profit. So we're always going to get that pullback, but that pullback is an opportunity for new money to come in and jump in or whatever the case might be. So as you can see here, according to this on the weekly chart, Bitcoin definitely wants to come back to this 0.382 level. Let's see, it'll hold. This is at right around 105, 104,000. And it could still come down to this 0.5 zone, which is this 99. It technically could hold here and maybe make a head and shoulders, maybe right here. Who knows? And then it could do like maybe a small downtrend to this 0.618 zone, which is closer to 93. I would say Bitcoin at 93 is a great buy, right? Bitcoin at 85 is a great buy. If you got in earlier this year when you did get an opportunity to buy it, then I know that you're up. So yeah, super important. So typically here we're going to talk about pretty much the same stocks. Why is that? Now there are tons and tons of ticker symbols that we could look at, but we want to make sure that we're putting our money where the institutional investors are putting their money, right? I want my money wherever it is the people who got money is putting their money. So for the most part, we are going to be looking at pretty much the same ticker symbols. We want to make sure that one, there's enough volume. So if we do get into a trade, that we're getting in and out easily, right? The more people who are in those trades or trading those ticker symbols, the more convenient, the smaller the spread is going to be between the bid and the ask, because you would hate to be stuck in a trade, or you're in a trade and it's profitable and then you have no one to sell it to, right? And you've just got that contract. So for the most part, we look at pretty much the same stocks. Let's take a look at SPY. So here on SPY, again, this is on the weekly, pretty similar to the Bitcoin chart in terms of that all-time high, the exhaustion, right? And it's interesting because, you know, with the crypto markets and stuff, they were burst out of a necessity to be away from the institutional markets. But institutional markets got all the money. So that once they found out that these new tools were going to be an asset to anybody, they bought it all up. So we do see correlations within the different markets, right? But correlation is not causation, right? The reason that we do see this causation is one, because the money is intermingled, and two, they're both being bought and sold by humans, right? So again, that human psychology is always going to be there, and that's why trading, just a little side note, but that's why trading is just such a powerful um, skill to have, because no matter where you are, there's going to be a market for something, right? And so if you can understand the trading psychology of that, then you can essentially profit off of arbitrage, right? So September, right? September 1st. So the market opens tomorrow. We don't know where the market's going to go, but historically, September is typically a red month, right? So with this in mind, right, using history to help inform our future decision making here, I could see SPY going all the way down to this 639 zone, right? We talked about that in the past. This is a key zone here. We've got this huge engulfing red candle from the weekly a couple weeks back in the middle of July. And that's where I've got that zone drawn, right? We can see that here. I went ahead and I put this Fibonacci up, but I think this was on a lower time frame. Let's take a look here. Yeah, totally makes sense. So we did the Fibonacci from here to here, and then we can see the retracement. Now, if we crash through this retracement zone, if this next daily candle comes through and crosses below this 0.238, 0.382 zone on the Fibonacci, we can definitely see it going down to this 0.5 or maybe even this 0.618. Right, and this 0.618 is still pretty close to this white line that I drew, right, which was the high of that previous weekly bearish engulfing candle. The 0.618 here is at 639.12, and at the top of that candle was at that 639.84, right? And so we'll see numbers like that kind of be close to each other, because again, when let's say you're purchasing Bitcoin or you're purchasing whatever stock, if you're not watching the chart and you know, hey, look, 639 is a good buy price, or I've seen it at 639 before and then it got away from me, right? It got higher than that. But if it's back at 639, that's where people, again, who don't watch charts but are just watching the price action, saying, hey, like, this is another opportunity to purchase here, right? Because I've already seen it go up from here, so they expect that it's gonna be a good buy price. Cool. Let's take a look at Walmart. Love Walmart. And again, like I said, we try to trade the same stocks because these stocks have personalities, right? The type of people who trade them are going to have certain kind of habits, and in addition to that, how they trade throughout the day is going to be pretty similar. So you can start learning more about the characteristics of how a stock moves, how that price action develops throughout the day. And you can use that to your advantage, right? So you can help your own personal trading psychology. Excuse me. Cool. So let's look at the monthly. Now, when we look at the monthly, lots of indicators going on here. Excuse me. When we look at the monthly chart, we see huge push up from last year, November 2024. And it stayed above this price, right? But for the last 4 months, we've really been consolidating right here in this zone, which is definitely a really tight consolidation right here. So we don't know if this is going to push to the top side or push to the downside. It may give us, this may be bearish consolidation, right? Giving us maybe a double top here. And again, this is on the monthly. So let's take a deeper look so we can get more data so we can make good decisions, right? So we got this top and then we got this. This could be a double top for sure. So again, we see the Fibonacci retracement here, kind of giving us a little bit more insight as to where the price is going. Now, let's take this Fibonacci away just so we can show you This is essentially kind of like a box consolidation here, right? Boom, it broke out. Now, once you got 1, 2, 3 green candles on the weekly, this is the three soldiers, right? And this is just a pattern. So let's pull that up. Three soldiers pattern trading. All right. Cool. Share this tab. So yeah, three soldiers pattern. You see, I looked it up. When you see these three soldiers, you might get a little retracement on that, but essentially it's a bullish signal, right? Super important to understand what's going on in the market so you can identify these opportunities. Now here, right, this is definitely the opportunity. So this could technically be bullish, but if we get a break below this, then we likely may come back to this 87 zone. Very organic zone for this ticker symbol because again, for the most part, it's been pretty bullish and it probably needs to cool off, right? And again, this is on the weekly. So we see this double top. We could probably hold this 87 zone, 87.30. We'll see. But you want to wait for the setup, right? You don't want to just jump into it because you think it's gonna do what you think it's gonna do. Because at the end of the day, unless you're getting leaps where you have enough time for the market to go both ways and then go towards your intended price, you want to make sure that you're just catching the play that you're looking for, right? We talk about Starbucks a ton. Let's look at Starbucks. And again, this is on the weekly, so let's take this off. Let's get a little bit more clarity. I drew this channel here zone because I was like, okay, cool. This is definitely going to be maybe a push to the upside. Just wants to come back to this these 50, these 100 MAs. We got a lot of MA consolidation here as well. But you always want to remember too, whatever you see in the market, the other people see that too. So understanding these supply and demand zones, understanding that there's going to be market manipulation is going to help you help you implement more patience into your trading strategy. So let's take this off again. Let's just keep it simple. And so what I see here, right, again, we're on the weekly. So this is the opposite of the three soldiers, right? Technically, of course, this candle isn't finished forming, but what I see here is three red candles, which is the three crows, right? So let's look that up. Three crows. All right. Cool. So three black crows, that's just the name of it, but essentially it's the opposite of the three soldiers. So three of the same candle means that's the new trend. All right. Cool. Let's go back to Starbucks. So as we see here, if Starbucks closes this weekly candle below this 86.9 zone, I can probably expect it to come back to this supply zone down here from, I would say 80, 85 to about maybe 78. If it does come to this zone, I can expect it to make a double bottom, right? So a double bottom here, boom, back to the upside. Maybe we'll get 113, 113, 114. Looks like it was there earlier this year. So not too out of the ordinary, right? And then we can see the last time that it came into this kind of zone, it did a double bottom here and then it shot. So, and then when it shot, right, we got this 1 week where it moves from 70 to 90, which is great, right? You would love to catch that. But then it continued going up until you got these three candles. And then again, let's look at it, right? Let's look at what's actually going on. We see these three crows, boom. Then we get a huge push to the downside. The push to the downside was maintained, right? Because when we see here, if this is a double bottom, this would be that neckline. This neckline acted as support here. Boom. Held that support, and then it ran to 114. So between here and here, right, this is August 2024 all the way to February 2025. So understanding time, super important. That's why expiration dates are crucial for understanding what to really expect with a move. But yeah, for sure. So what do we see here? Potentially a double bottom happening. Maybe we'll get that push to the upside in a couple of weeks, right? Maybe at the end of the year when everyone's getting their what's it called? their pumpkin spices, right? Maybe that's what's keeping them afloat. All right, let's move on. Meta platforms, I don't really want to look at them, so we won't. Nvidia, let's take a look. Exhaustion. That's all I see here. I see the exhaustion, right? Again, this is on the weekly chart, so we can see that strong push to the upside from 92 to 180. Jesus Christ. But now we're getting three soldiers. So what I see here, potential for the downside. Now we definitely have a resistance zone, or excuse me, a support zone at 170. But if we crash below 170, we could go to 148. Some people don't think that's gonna happen, and that's totally fair. But I don't really care, right? We just want to wait for the market to show us what it's gonna do, and then we would take advantage of that. So not too much to look at there. Let's move on. Tesla, definitely a crazy mover. But with volatility comes opportunity, right? So what do we see here? And again, we're just on the weekly chart, just going over some of this stuff. So we had the strong consolidation at this 213, or I guess 186 to 260 zone. Then we got that strong push up to 400 and some change. Then we got that push back down into this zone, right? So it was here, pushed up, pushed down, and then we got that push up. Could not come back to this zone yet. But now we're getting consolidation right here, right? Bouncing off the 50 MA. So I probably will not be playing this to the upside or the downside. Oops. Because we see a lot of wicks, right? Which means on a day-to-day basis, we're getting a lot of pushes up, pushes down, pushes up. But I see a ton of wicks at the top, which means we're probably getting a lot of supply, right? This is getting to the zone and people are selling their stocks and it's pushing back down. You can go check the news yourself about what's going on with Tesla and what do you think that's going to do for it. But for the most part, on the weekly, right, holding this on the weekly, um, not really a lot of action here for a strong direction, right? We want to see that strong direction. On the daily, however, what do we see? We kind of see it looks like it's kind of skipping a rock, right? For the most part, we do want to see this break above this 363 zone for a strong momentum, right, to the upside. But ever since this downtrend, it's been on an uptrend, right? So since here, it's been higher low, higher high, higher low, higher high, higher low, higher high. So if we can't hold this higher low here at this 318, excuse me, down at this 318, 319 zone, we can probably expect this to push down, right? Now, if we do hold this zone, we could push back up to 350 and higher, coming back to test this 360 zone. But again, you want to wait for the setup, right? Again, if we're looking at the daily, what do we see? Right, the three black crows, right? So this is a bearish revert. This is a bearish signal, right? You see these three, boom, we stayed going down until we got the push up. And technically here, right, we got 1, 2, 3, 3 green candles. So this could have essentially given you the opportunity, like, hey, maybe this is going to continue to go up. But you want to look at the chart, right? And this is why you don't want to trade every ticker symbol. You want to understand, what are you trading? Me personally, you want to stay away from stocks that are too volatile because they're not going to follow those rules so cut and dry, right? So if you trade a stock, you'll have like the experience to understand, hey, cool, maybe this isn't the push that we're looking for. Right, let's move on. Amazon. Let's go back to the weekly. Let's go back to the weekly chart. And also too, little side note, right? It's okay not to trade every day, right? You want to wait for those high quality setups throughout the day or throughout the week, right? You don't want to trade every day because the opportunities aren't there every day. And that's the easiest way to try to blow your portfolio. So P for patience, right? Just be patient, wait for that high quality setup where you see, hey, look, this is undoubtedly, I've got so much confluence here that I've got too much confidence to not take this trade. But for the most part, you want to stay out of those trades until you get those strong indicators. So what do we see here? So since May, right, we're on the weekly chart. So since May, it's been on an uptrend. We did get a big red push in July to the downside. And now we came back and tested that 234, and we're consolidating above this 226. We're getting a green candle on this week, but who knows what we'll get, right? We might continue to consolidate here. I wouldn't trade that. I would only trade if it goes below 226, and I'll get puts to 222, maybe after that 219. But other than that, I wouldn't trade that. Or if we get past 234, we might get a push to like maybe 240 at the next psychological zone, right? It definitely has been there before, so definitely not afraid of it. This could be a very fat head and shoulders. Who knows? Inverted head and shoulders. The shoulder, down, head, another shoulder, but it's not technically a head and shoulders until we break this neckline, right? So if we get this push above 237, yeah, I mean, who knows what we're in. Let's move on. Let's look here. What do we have? What do we have? What do we have? Let's take a look at Reddit. Reddit has been an absolute tear all year, right? Even ever since it's IPO'd, honestly, right? So since March 2024, when it IPO'd, it's been going nothing but up. It had this downtrend from in this year, February 2025, down to April. But since April, it's been back on that up tear. Made new all-time highs in August, which was about 3 weeks ago. It just hit all-time highs. So we'll see if this wants to form maybe a cup and handle, right? Let's look at what a cup and handle looks like. Cup and handle. Yeah, so cup and handle. Cup and handle is just a big U and then essentially a bull flag, right? We know what a bull flag looks like. Bull flag. And also, again, like, I've been trading for maybe, let's say, a year and a half, 2 years. Don't be afraid to find more information, right? You always want to be trading with other people. You always want to be exposing yourself to some new insights, because your eyes will get tired looking at the same charts. So for the most part, from my perspective, I'm not trading too much this week, especially if I don't see the opportunity.